Welcome back. You're watching Invest Africa. Well, the country's trade policies aim to make the island of Mauritius an open and globally competitive economy in order to become well integrated into the world trade system. We now take a look at how the country is positioning itself to optimize trade in Africa and around the globe.
The Mauritian economy has reinvented itself several times over the past few decades. Each decade has been marked by new developments and industries that have made the country more diverse and helped grow the country's export base.
There is a lot of watchmaking, there is a lot of jewelry, there is a lot of diamond cutting, shoes, light engineering, light plastics. So Mauritius exports over 300 product lines and to over 150 countries. Our exports last year was 40 billion rand. Out of that, 16 billion rand was goods and 24 billion rand was services.
As globalization increases in Africa, the idea of special export zones has become increasingly popular. The establishment of special export zones in Mauritius is one of the country's most significant steps towards export diversification and an important part of its integration into the global economy.
The whole country of Mauritius was declared an export processing zone. Not any restricted fenced area, but the whole country. And it allowed a lot of manufacturing base for exports to develop.
60% of Mauritian exports are destined for Europe, and given the current uncertainties in this region, Mauritius is looking to strengthen trade on the African continent by leveraging off trading blocs.
Mauritius is a member of SADC, it's a member of COMESA, it's a member of the Eastern African Community, all of which are increasingly important regional groupings. All of these economies are growing at 5% plus, as we know. Then collectively, the size of these economies is much larger than Mauritius.
This will not only allow the country to be an important regional player, but a strategic partner on the global stage. Tumisha Mahanyele, Johannesburg.
Still with me in studio is Kemp Munich. He's Head of International Tax and Advisory Services at BDO, and James Ehlers, MD of Atterbury Property Developments, with us as well. James, we've largely been positive about the investment merits that Mauritius puts on the table. Where do the red flags get raised? What are some of the challenges that are faced that go hand in hand with investing in this country?
I think from a commercial real estate point of view, the only red flag that I see is potential overdevelopment. We have an economy with limited size and a limited population. It is growing. It is a good place to do business, but I've seen it in other African countries where you see a commercial success. Somebody wants to emulate that. They come in and they try and redo what's been done, and ultimately you get an oversupply. And as soon as you get an oversupply, that's where the damage starts getting done. Mm-hmm. But as a country, I mean, it's stable. The currency is relatively stable, so I don't see red flags from my perspective, other than oversupply of commercial real estate.
From a tax perspective, Kemp, I mean, investors and companies channel their money through countries like Mauritius to reduce tax liabilities, and that was proving a bit of a challenge to be dealt with for the country. The Double Taxation Avoidance Convention between Mauritius and India was put in place, for example, to try and prevent treaty abuse and create greater transparency on the exchange of information on tax matters between those two countries. Effectiveness of those kind of policies being put in place?
Yeah, I think if you look at the whole Africa continent and the way South Africa interacts on the tax side or revenue side with other countries now, is that there's definitely emphasis on more transparency, and I believe that's going to put more pressure on international companies, especially South African companies dealing with Africa and Mauritius. Mm-hmm. So it will become more difficult to operate without being seen or trying to get all the loopholes going. But I believe from a tax perspective, South African companies got the problem that they need to put people there, they have to have proper businesses there, and that's not always viable to go and place senior people there in Mauritius itself. And I think that's a challenge for South African companies.
Some would say those businesses need little incentive to let their employees go to an island.
Yeah, I think it's nice for the first 2 weeks, and then after a few months and after a year, you're not sitting on the beach every day, so it's not that great anymore, you know. So that's a challenge South African companies face at the moment, and there is much pressure from the revenue services on international transactions, on effective management. They want to go the international route, etc. So I believe that's one challenge from a tax perspective that definitely South African companies have to take into account when they want to use Mauritius as a route into Africa.
What's your view on Mauritius as an efficient conduit for capital, helping it flow smoothly around the world, challenging much needed investment onto the rest of the continent, for example?
Once again, the ease of business, there's no exchange control requirements really, so there's no withholding taxes, so all the major banks are operating there. So if you go to Mauritius, you don't go to a bank or a financial system that's not known. It's quite easy to move money around, to keep your money there, it's safe. All the South African banks are basically operating there. So I believe from that perspective, they've got quite an advantage. Where if you look into Africa itself, most of the companies, either South Africa or international, wants to get their money out of African countries ASAP. Or there's huge restrictions, for example, in Angola, to get your money out back to South Africa or to Mauritius even. So there Mauritius got a huge advantage over the rest of Africa, except South Africa, that the flow of money, and that could happen very easily.
Yeah, there's quite a focus, James, on diversifying this economy, and there's a very fine line between the risk this poses and the opportunity as well, because there's a risk posed to the country's growth story if we don't see the economy diversify, but the opportunity in terms of investment areas as government increasingly looks towards diversifying the economic base. How are you reading that scenario as a property developer specifically? Because one would assume that with that diversification coming through, you'd have players other than hotel operators and retailers wanting to develop.
Well, I think the Mauritian government realizes that land is a very scarce resource. It is limited, so I think that they have done well to utilize land which was historically underutilized, and to create value and to create essentially another pillar of the economy. Mm-hmm. But I think given the size of that economy, there's a limited scope in terms of that sector.
Yeah, Kemp, we've got government taking steps towards export diversification, and it's an important part of integration into the global economy. What are you making of the success governments managed to reap so far?
I believe like the free trade zones, I think that's quite an important incentive if they can make it work. If you look at Nigeria, the Chinese government and the Lagos government have started the Lekki free trade zone there, and a lot of companies already signed up there, for example. So a lot of companies going. I think South Africa is also considering also free trade zones. I know we've got some, but I think they have it a bit more formal structured like they've got in other countries. So I think it can work, and definitely from a manufacturing point of view and in and export, the free trade zones are very important, because you don't have to pay duties and all those type of things that's in place in the free trade zones. So I think that's good initiative, but it will depend on the companies entering into that free trade zones.
Yeah, we've had South Africa's status as a gateway to Africa for investors coming under increased scrutiny over the recent past, and many have highlighted that other African countries are making stride in putting themselves out there as a possible gateway to the rest of the continent. To what extent is Mauritius considered a gateway for other investors?
I think that's one of the major players at the moment. I believe it's one of the major players, because there's either South Africa or Mauritius, and there's a big competition going at the moment with our internationally headquartered companies regime in South Africa. They want to compete with Mauritius. And another player in the market is Botswana sometimes for different industries. They might also be a gateway into Africa. But at this point in time, I think Mauritius is the one that's giving South Africa the biggest competition of being the gateway into Africa.
Location seems to be key as well. Mauritius centered in the global triangle of growth, linking the Middle East, Asia, and Africa. James, what's your outlook as far as growth for you as a property developer in Mauritius is concerned come 2030?
Well, just to get back to your point of the gateway, I think that if South Africans are using Mauritius as a gateway, then it speaks for itself. Mm-hmm. Even though South Africa is considered to be the gateway. I think we are operating in many countries in Africa, and all of that is through Mauritius. Again, on the Mauritius, on the island itself, I think that the real estate sector can grow as the population grows and as the economy grows. Mm-hmm. So I think the pace at which it grows is dictated to by that.
Yeah. Well, let's leave it there, gentlemen. Thanks so much for having joined us today. Of course, guests in studio today, Kemp Munich, Head of BDO International Tax and Advisory Services, and James Earles, MD of Atterbury Property Developments as well.